That's when you know you're getting close to a bottom, when nobody wants stocks again. We need to have these people giving up on these companies. Where will the stock market bottom? Now, for those of you who watch our channel, you know I'm not one to make predictions on what price or what date or anything like that. But at the end of this video, I will give you some idea of where I think the market will bottom at. Now, does that mean it's set in stone? No. However, there are things we can look at from the past to determine these different kind of ideas. So if you're new to the channel, my goal as a value investor is to sit here today and say, where do we stand today? And what does the future look like based on what the past has looked like? Yes, the past is no guarantee of the future. I get that. But human nature goes up and down, and the pendulum swings side to side. Euphoria becomes depression or whatever name you want to give it. Look at the NASDAQ in the last year. Last year, the NASDAQ went down 30+%. The S&P was down almost 20%, or maybe it was 20%. We came off of 14 or 15 years in a row where basically we only had a couple years of down markets. That's not a normal thing. We had a market in which everyone was an expert in cryptocurrencies, everyone was expert in hype stocks, and value investors were considered dead. We had an ETF called ARK, ARKK, which has fallen 80% from its peak almost 2 years ago today. They only invest in disruption, they said. Investors don't understand disruption. These Michael Burrys, Warren Buffetts, Charlie Mungers, they don't understand disruption. To which I always say, you don't understand investing. Investing is the present value of all future cash flow. Now, just like stocks can go up indiscriminately when times are good and stocks are the voting machine, guess what happens? When stocks are a voting machine and stocks are loved, they go like this without any regard for valuation. Well, the same is going to happen on the way down. People are going to sell indiscriminately. Why? Well, look at ETFs. When you buy an ETF, let's say you buy QQQ, which is the NASDAQ ETF, or SPY, which is an S&P ETF. When you buy that, the people who run these are required to go buy every stock in those ETFs no matter what. So it pushes up prices. More demand pushes up prices. Eventually, when people start selling these, they're going to be forced to sell those stocks and the prices will be pushed down further. We will probably have to get to a point where stocks are irrationally cheap. Now, if you've watched our channel and if you're a member of our community here, every day I post the stock market to GDP ratio based on my data right here. I went back to 1929, pulled up GDP, pulled up the S&P, and since the S&P is a market cap based ETF, I was able to make a simple metric. And right now, according to Friday's close, we're 66.1% overvalued, which is one of the highest in history. Last year, we got upwards of, I think at one point 107, because this is done at the end of the quarter, but I think intra-quarter, we were at 107%. Now, is that good? No. In history, the average 10-year return without dividends is 6.6%. When we're undervalued, the average is 9.3%. When we're overvalued, it's 2.3%. Here's the scary part. When we're 30% or more overvalued, the average is negative 0.1%, and we're currently 66.1% overvalued. The last time we were that high, or close to it, the dot-com bubble was 57.1% overvalued. We're not even low enough to say we were below the dot-com peak. That's how scary it is. And look at the returns at 57.1. Without dividends, the market for the next 10 years did negative 2.6% returns. That's pretty scary. Now, I don't say it to scare you. I say it to prepare you. And I say it to remind you that there'll be better times to buy. Because in order for this to happen, stocks got to fall. And when stocks do fall, it's a buying opportunity if you buy the right stocks at the right price. If you avoid the hype are the first ones to fall. That's why all the stocks that we were criticizing, that everybody told us we were stupid for, are all down 80, 90% or more. I literally don't remember a stock that I said, this stock is stupid, avoid it, it's all hype, that's not down at least 85 or 90%. Literally every single one of them. The Everything Money community has already helped thousands of people exactly like you to help them understand financials, understand investing, and understand the emotional side of everything to make better decisions for your future and your money. What you get with the software is my 8-pillar process, our stock analyzer tool, which was used over 1.3 million times in 2022, and all the other stock screeners that the Everything Money community of intelligent investors use to find their value plays. These are the exact tools that Mo and I use every single day to find the investments that make the most sense to us. And you also get access to Mo and I and all the thousands of other Everything Money investors, so you don't have to do this alone, because that is the hardest part about investing, is being on your own. Make the choice I made. Invest in yourself for a little over $1 a day to make these decisions easier and smarter as time goes on. Here's the catch. We're not going to give you fish. I'm here to teach you how to fish. If you're looking for a magic bullet, we're not the site for you. We're not the channel for you. If you're looking to become a smarter investor who can find their own process, welcome home. Get started now, risk-free for 30 days at everythingmoney.com. Now, I have stocks that are down 30 or 40% as of January 23rd, 2023. But those are stocks I'm buying more of because they generate good cash flow and they're just not in favor right now. But those other stocks that don't generate cash flow, don't have good balance sheets, if they're not going up in stock price, what are you doing? How are you getting your return? For me, I'm okay when a stock that I love is down because I can then buy more shares. That's what I want to do. So where will stocks bottom? Well, that's a good question. The absolute best buying point in history was 1982. Stocks were undervalued by 65%. Do I think, and look, by the way, the next 10 years, stocks made 14.1%. Think about that, guys. The less you pay, the more return you get. It's just math. The more you pay, the less return you get. The hard part about investing, we can look at this all day and say, oh my God, I would have loved to buy back here. Yeah, but to be back here buying, you have to go against the crowd because everybody hated stocks. There was an article written somewhere in 1981, I think, or maybe it was early 82. They said, death of equities. It was an article written to say stocks are dead. That's when you know you're getting close to a bottom, when nobody wants stocks again. I still have my friends who followed hype who are now like, oh, well, you know, I think this company's going to turn around. This company, okay, sounds good. We need to have these people giving up on these companies. Tesla's down from a peak of 414. It got as low as 108 or 105. Now it's back to 135 or so. I still hear the Tesla bulls saying, it'll be fine. I need those Tesla bulls to say, I'm giving up. I think Tesla has more to go because of the emotion. Tesla and Bitcoin to me are the poster child of this bubble. Tesla and crypto. And I love Tesla cars. I like Elon Musk. I think it's going to be a car company that's going to be around for a long time. But remember, Amazon in the peak of 2000 to the bottom went from $113 a share down to $6. That is a 95% drop in stock price. Now, it's easy to say, oh, yeah, I would have definitely bought that. Well, yeah, in hindsight, of course you say that. It's harder to do it in person. And that's what makes investing hard. So, to get back to the original question, where will we bottom? We've got to get to a point. Now, I don't know what value that'll be, but my guess is we have got to get to a point where we're at least 20 or 30% undervalued. Now, that doesn't mean that stocks have to fall for that. That's the key about the stock market to GDP ratio. I look at pure valuation. I don't look at the price of stocks. So, if it were today, stocks would need to be at around high teens at S&P for me to say we're probably at a bottom. Could it go further? Sure. And I'm not calling this bottom. However, that's based on GDP of $25.7 trillion. Let's say inflation is 10% a year for the next 5 years. All of a sudden, we have 40 trillion in GDP. Stocks are now 6.9% overvalued. So 2,500, boy, that looks really good. That's 33% undervalued now. So it's not a matter of saying, I don't look at the actual where are the stock prices going to be when they bottom, where are valuations going to be when they bottom. There's a thing called a 10-year cyclically adjusted PE ratio. At the beginning of every secular bull market that I can think of, I would make the argument now, I used to think this is not true, but the argument of 2009 being a secular bull start could be made. Apart from that one, that 10-year cyclically adjusted PE got to single digits in every major bull market run for the future. Single digits. It's currently at 29.3. The average is 17. The median is 16. The lowest was 5. And the peak was 44 in December 1999. Now, this 10-year PE is not as reliable a metric as the stock market to GDP ratio, but it's still useful. So at the end of the day, I don't know what dollar amount or what index level it'll be, but I'm going to keep watching this. And I post it every day in our community so people can see. I post it literally every single day right here. The Paul Stock Market Indicator right here. So as of today, it was 1.545, 66.1% overvalued, fair value of 29.32. That's fair value. So that's where we stand. Thank you very much for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?